case briefs, and so much more. LSData's got what you're looking for.
In 1966, the United States Court of Appeals for the Ninth Circuit heard the case of Photosonics Inc. v. Commissioner, a dispute centered on the proper accounting method for inventory. The case was initiated when a taxpayer in 1964 challenged an income tax deficiency assessment for excluding factory overhead expenses from their inventory calculations, only considering direct labor and materials costs. The government argued that including factory overhead expenses was necessary for accurately reflecting income as mandated by the Internal Revenue Code of 1954, Sections 446 and 471. The tax court rejected the taxpayer's accounting method, with testimony from accountants raising doubts about its validity. The taxpayer petitioned for review, maintaining that their method was acceptable. Nonetheless, the court upheld the assessment of the tax deficiency, ruling that the proper allocation of factory overhead expenses to the inventory was crucial for a clear reflection of income. Ultimately, the court held that the taxpayer's accounting method for inventory, which neglected factory overhead expenses, did not provide an acceptable reflection of income per the Internal Revenue Code. The tax court's affirmation of the deficiency assessment was based on this finding.
Case briefs, and so much more. LSData's got what you're looking for. Visit LSD.law, elevate your mind. Leave the stress of class.